Hello and good morning, listeners. Welcome back to special edition of Almus Market Mornings with Ankit Sharma, providing us the market updates. Now, Ankit, we have had a few data releases from major economies yesterday. How does that see impacting the currency movement? We've already seen slight USD weakness coming in after those data releases yesterday. So, what's your take?
Good morning, Shikhar. Good morning, everyone. USD has been softening since the latest Fed meeting, where they first ruled out any interest rate hikes and at the same time reduced the quantum of QT. Subsequently, last week, services PMI data also cooled off, where we saw both business activity and new job creation were lower as against the expectation. Now, yesterday, the weekly jobless claims data came out from US. This data was again weaker at 231,000 jobless claims as against 210,000 odd expectation. This series of data that has been coming out has been pushing the dollar down, and traders are now creating a narrative that US may now lower the interest rates earlier than expected. This may be true as well. However, I would like to reiterate that the movement that we are seeing now in currencies is part of the larger range trade that is in force since more than 3 quarters now. Any expectation of a directional move emerging at this point of time may not turn out to be very fruitful.
Okay, that was pretty good. And yes, folks, from the summer and the heat wave, as well as the higher interest rates, US economy have started seeing some bit of heat as well. Now, we also had the Bank of England meeting or the US Central Bank meeting yesterday. What's your take on their stance?
See, all the Western economies are they are dealing with inflation and lower growth. Similar is the case with the UK. So they have more than 3% inflation reported last time and sub 1% growth rate. So at certain point of time, they will also be reducing their interest rates to lower level from current more than 5% now. So it's a matter of who will blink first. If US blinks first, probably we might see GBP going back again up, and subsequently we will most likely see UK also reducing their interest rates, which will again push back GBP down to its median level, where we are currently right now. So as I said, Shikhar, mostly we are trading in that broad range. GBP also probably the bottom is getting defined between 1.23 and 24 on the lower side, and on the higher side 1.27 to 1.28.
That's quite interesting, Ankit. We see we are having an interesting rodeo between the major economies as to who blinks first or who cuts the race first. Just to close, Ankit, it's Akshay Trithiya today, and we all know how auspicious it is when it comes to the Indian markets. So, what do you think? How should gold be acting, and what should we be expecting for gold?
Gold, Shikhar, we have been bullish, as you know, since October 2023. We initially had an expectation of gold touching 2450. It touched 2430 instead and came back below 2300 last week. I continue to believe that we are in the middle of a gold bull rally, which probably will last for many weeks and months. This bull market has been powered by the buying from countries like China. This is not going to go away anytime soon. I urge investors, traders to keep gold in their portfolio. The gold rally might surprise everyone, including myself. That is what I tend to believe, that we are in a long haul bull market for gold.
Okay, that's quite an interesting set of views. And yes, folks, that's been up for today. So we see the BOE keeping their rates stable without any change. And as Ankit mentioned, he's expecting gold to start rallying quite significantly. We've seen dollar index coming down a bit after the jobless data claims, and we today expect the GDP numbers on the UK economy. So this is the update for today. Thank you so much for joining in, and we shall come back again on Monday with another round of updates. Thank you so much for joining.